Good morning, everybody. Welcome to the Morning Blast. It is Monday, the 8th of December, all day until tomorrow. As usual, you join myself and Mr. Brown for a raucous jumpstart for your trading day. Usual trigger warnings apply. This is recorded live. We do not do any editing, so apologies for anyone saying shit, fuck, or bugger. We hopefully will add a bit of value to your day, put a smile on your face, chat about what's happened over, as it's Monday, Friday and the weekend. And as it's Monday, not just a look ahead to today, but also a brief look ahead for the rest of the week. As usual as well, nothing we say on this podcast is trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan, or indeed Michael. And speak of the devil, Michael, how are you?
Well, a very good morning to Ryan. Good morning, everyone. Happy Monday. There are just 10 proper trading days of the year left to go.
Oh, make it stop. Make it stop. I've had enough already.
Well, judging by the lack of activity that we've seen over the last few days, I think most people are with you. And I was saying on a call earlier on, of course, with the FOMC up on Wednesday, yeah. I think even more will be using Chair Powell's press conference as a get out of town excuse. So right. Things are going to become a bit thin.
As you have mentioned that, I'd love to hear your take on this, because if I remember what I posted over the weekend, which is hard enough to remember what I did this morning, let alone what I did over the weekend, I think, isn't it potentially the highest level of dissension in the FOMC meeting that we've seen for like a couple of years now?
Well, potentially ever, actually. I mean, we'll obviously talk about this more on Wednesday, but if you tally up all of the public remarks that FOMC members have made, it gets you to potentially as many as 5 dissents for policy to be held steady. And according to the Bloomberg data that I've looked at, the highest number of dissents that we've ever had is 4. And the last time that happened was all the way back in the 80s. And even Clive might not have been trading then.
Well, I had something completely different. I had latest comment, right? So we haven't seen 3 or more. So I suppose it's how you saying it's 5 one way, 3 the other potentially, right? So 5 suggests 5 out of the 12 are opposed to further easing, or at least especially sectoral cut. 3 are keen to cut. So we haven't seen 3 or more dissenters since 2019. But you're saying it could be as much as 5.
It could be, yeah, it could be. But we will see.
Well, and if it was only 3, that's only happened 9 times since 1990. So there's a little factoid for you. But anyway, as Michael said, we'll discuss this later on in the week. But let's start off with our good friend Clive Lambert with his From Futures Text with an update on price action and also the significant levels to watch at the moment. Starting off with equity markets, they saw green on Friday, well, mostly. Bar the FTSE, which set a weaker tone after days of going sideways. Clive remains bullish on most indices, with the S&P gunning for all-time highs at 69.54. Bunds, I hold that thought because I've got another point on that. Bunds, German bonds, saw a big sell-off on Friday and more overnight, so we're testing/breaking key support at 127.89 to 127.94. It was fairly quiet on Friday in FX land. Bitcoin was volatile yesterday, but the bulls are winning so far today. Gold, the yellow metal, ended a week of doji candles with another one on Friday, so going sideways fast. For now at least, but nothing trend changing. Silver made another all-time high on Friday, printing 59.90, hitting the long-held upside target. With targets higher at 63.08 and 64.17, but obviously bearing in mind we are in uncharted territory to an extent. What resistance? LME copper. Dr. Copper keeps going with its recent rally to all-time highs, printing 11,771 overnight. LME aluminium hit resistance at 29.20. Above here, we're printing levels last seen in May 2002. In the oil benchmarks, Brent at WTI, they saw green and might think about a move to retest key upside levels at 65.39 and 61.87 respectively. On the gas side of things, gas oil would give a buy signal on a move through 678.5. Just below here is where Clive was writing it, so apologies if it was already through that. Sticking with gas, but rather than gas oil, the benchmark for natural gas in Europe, TTF, finally posted a green candle on Friday, 27.565. at 26.61 and 28.82 are the ones to watch on the further recovery of gains, with the first of these under fire as Clive went to print. The soybeans, obviously the ag sector over in the US, again, these are all futures rather than cash, saw red on Friday and again overnight, so responding to short-term sell. What's happened?
You still there?
Yeah.
Hello? Oh, yeah. Sorry. My technological prowess came in and I turned my Wi-Fi off by pressing the wrong buttons. So I might have lost you. But you're still there, so we're fine.
Soybeans again. So soybeans still red on Friday and overnight. So responding to short-term sell signals given last week. Just one thing I want to add before we crack on to you. Interesting report from Citadel over the weekend. Well, I think it came out Friday about buybacks. US companies have authorized a record $1.3 trillion in buybacks this year. Obviously, we're looking to squeeze into year end, which is, we always suggest that potentially, the path of least resistance is higher. I think it could certainly be for the next couple of weeks because, apparently according to Citadel, they project a whopping $5.3 billion of daily VWAP demand into year end on the back of buybacks alone. And also, coincidentally, the second half of December statistically is by far the most bullish period of the year. I think it's since the 1970s. It's like 75% of the time it finishes higher in the last 2 weeks of December.
Yeah, I think that would sort of chime with, well, I'm not entirely sure how much work I'm going to be doing after the FOMC, but that would sort of chime with my expectation, which would be if you were to get any sort of wobble in equities on the back of what might be interpreted as a hawkish cut from the Fed, then I think the dip buyers are going to step in very, very quickly indeed to start to lean against that. Not only have you got all of those buyback flows, seasonality, people trying to window dress their portfolios into year end a little bit. It's very much agree with you. The path of least resistance does still lead higher.
It's called the Santa rally for a reason, right?
Well, indeed. And Santa is well and truly on his way.
Way. What are you expecting out of his big sack?
Oh, Christ. Shall we move on? Deary me. It's only a Monday morning, for goodness sake. Anyway, let's take it back to Friday because we did have a few notable developments. We may as well start with data. Got to be honest, I don't often start with Canadian economic data on the morning blast, but I will this morning because we have the November Canadian jobs report on Friday, and whoever is forecasting this data has had an absolute mare. Employment rose by 53,600 last month in Canada compared to expectations for employment to have fallen by 2,500. That actually marks the third straight month of job gains north of 50k in Canada, which in turn saw unemployment fall from 6.9% all the way down to 6.5%. And obviously on the back of that, you've had a big rally in the Canadian dollar. And you've also had a big move in money markets as well, with the Canadian swaps curve now fully pricing a 25 basis point BOC hike by next October. And I wonder whether this is going to become an increasing question that we pose through 2026, which is which of the G10 central banks is going to be the first to hike. There is already speculation that the RBA may begin to hike next year.
I could have sounded so like I was on the ball then. I was about to jump in and say, well, Australia looking confident. And now no one's going to believe that I actually had any insight whatsoever.
It's all right. We believe you, mate. And now, of course, you've got the Canadian swaps curve moving in that direction too. And then, not wanting to be left out, we've heard from the ECB's Isabel Schnabel this morning, who is undoubtedly one of, if not the most hawkish members on the governing council. But she said this morning that she is comfortable on market bets that the ECB's next move will be a hike. Now, money markets are not pricing an ECB hike until the back end of 2027. But nonetheless, it is interesting that central bankers are even talking about this, as opposed to, implying that they're in this sort of wait and see mode where we're just going to stay at terminal for some time. So certainly a theme to watch as we move into next year. In terms of other economic data from Friday, we did have the latest core PCE numbers out of the United States. Core PCE rising by 2.8% on an annual basis in September. That's down from the 2.9 that we saw in August, but the data is incredibly stale, so I wouldn't place too much weight on it, and I don't think Fed policymakers will be. We also had the latest consumer sentiment numbers from the University of Michigan on Friday as well. Sentiment rising to 53.3 according to the preliminary December reading. That's up from the 51 that we saw in November. Almost all of that uplift coming as a result of the end of the government shutdown. So it shouldn't be too surprising at all. Moving on from that, on the trade front, U.S. Treasury Secretary Scott Bessent held a phone call with his counterpart in China on Friday. U.S. Trade Representative Greer was on the call as well. I think they just rang each other to have a chat, to be honest with you, because there didn't seem to be much by way of sort of concrete, fresh developments from this, although Bessent did say that they discussed the ongoing implementation of the agreement reached between Presidents Trump and Xi in South Korea, and he believes that the implementation of that agreement is going well. So very much sort of confirmation of what we already knew. As I say, we could have kind of worked that out already with China keeping up their end of the bargain in terms of soybean purchases and such like. Also on the trade front, we heard from President Trump on Friday when he wasn't busy being given phony peace prizes and dancing to the YMCA at the World Cup draw. He was asked about trade talks with Canada and said that we will work it out, but did not actually commit to restarting talks with the country. Having said that, what on earth are you singing?
Well, it's a song about working it out.
Oh, is it?
Yeah.
Are you sure it goes like that?
Yeah. You young
Right.
whippersnapper, probably looking into Taylor Swift or something.
Oh, God, no chance. Where was I? Yeah, separately from that, we heard from the Canadian Prime Minister's office, which reported that Carney, Trump, and Mexican President Sheinbaum have all pledged to keep working together on a trade deal. Of course, USMCA is up for renegotiation next year, and that is undoubtedly going to be a key focus for all three of those nations. Moving on from that, but staying in Washington, D.C., we heard from NEC Director Kevin Hassett on Friday. He was saying that it is time for the Fed to, quote, cautiously reduce interest rates. Thought that was a bit of a notable remark because Hassett seems to have changed his tack from the summer where he was basically saying, Powell's a moron and he needs to cut 100 basis points today. I do wonder whether this slightly more statesman-like tone is because he's trying to actually sound a bit more like a Fed chair. Of course, he is in the running and very much seen as the favourite to succeed Jay Powell when his term is up next May. Hassett was also talking about the idea that Scott Bessent had last week, which is about making regional Fed presidents live in their district for 3 years before they take up the post. Hassett was saying that he agrees with that proposal, but that they have not discussed it with President Trump. This is, of course, important because if Hassett does become Fed chair, then he is going to be in charge of implementing this idea. So the fact that he agrees with it is certainly one to keep on the radar. Moving on from that, we heard from the Japanese finance minister, that was this morning actually, Katayama, very much giving more jawboning in terms of the yen, repeating that they are seeing one-sided and rapid moves that he is highly concerned about, repeating again that it's important for currencies to move in a stable manner, and again, repeating that they will take further appropriate action on FX if necessary. It must be said that the yen hasn't been overly perturbed by any of these remarks and has actually continued to trade in a softer tone, albeit very, very modestly since Katayama spoke. But it does nonetheless, again, point to the degree of concern that we see within the Japanese administration around the valuation of the currency, despite it having rallied in recent weeks. Moving on from that, a few bits and bobs of corporate news, a couple of bits on Elon Musk, X, of course, formerly known as Twitter. That has been slapped with a €120 million fine from the EU, apparently as a result of breaches of content law. X or Twitter, why do they call it X? I don't know. Apparently made 3 violations of the Digital Services Act. And sticking with Elon Musk, one of his other ventures, SpaceX, not only are they in talks for a private share sale at a valuation of up to $800 billion, according to the Wall Street Journal, SpaceX is reportedly preparing for a late 2026 IPO. That is, of according to the information, citing their sources. So certainly
something on that.
What?
There's been a lot of people getting frothy over this, saying, "Oh, look, this is brand new." So we've been talking about SpaceX's IPO for pretty much the most of the year.
Not only that, we've also been talking about where they might IPO, because this Texas exchange could be the prime market for.
Yeah, no, exactly. I don't know why everyone's got all frothy knickers all of a sudden.
No, neither do I. Well, yeah, it's a bit of an odd one, but also you've got to remember that right now Elon Musk has only one publicly listed venue or one publicly listed company, which is Tesla. So if he wants to tap fundraising, it has to be through Tesla. Whereas, of course, if he lists SpaceX on the market, then he has another means of raising funds for the business.
Right.
So certainly not a surprise.
Although this $1 trillion pay package is reliant solely on the Tesla market cap, so I do wonder how focused he will be. Before this came along, my base case was the reason he wants to IPO SpaceX was so he can just roll from Tesla into SpaceX and then 10x again, or 100x again. But obviously with $1 trillion on the line with Tesla's market cap, maybe it takes the pressure off Musk trying to inflate SpaceX so much. I don't know.
Well, potentially we will see. Moving on from that, in M&A news, of course, the big story on Friday is confirmation that Netflix will be buying Warner Brothers for $27.75 a share. This is only part of Warner Brothers that they will be buying. Warner Brothers are first going to spin off the Discovery part of the business, which is all of the TV news channels and TNT Sports and all that kind of stuff. And then in Q3 of next year, they expect to sell the Warner Brothers side to Netflix, and that's been valued at just shy of $83 billion. The problem, of course, with this is that it is going to face big hurdles when it comes to antitrust worries. We've already heard from a senior Trump administration official who said that they were heavily skeptical as to whether the deal would receive approval. President Trump was also asked about the deal on over the weekend. He said that the deal would represent a big market share, which could be a problem. He also said that he will be personally involved in the decision as to whether or not it should be approved. So Netflix are busy mining some gold to create him a statue or something that will convince him to give the deal a rubber stamp. Interestingly, the breakup fee for the deal has been set at $5.8 billion. What does that mean? Well, if Netflix aren't going to buy Warner Brothers for whatever reason, then they've got to send the company $6 billion. So it could be a very, very expensive one. And again, another thing to watch next year. A few bits and bobs from me lastly before I hand back. So I've rambled on a bit this morning. In the tech space, Intel, they're apparently going to begin supplying chips to the Mac and the iPad within the next few years. Apparently, this partnership might eventually extend to the iPhone as well. This is according to a website called Mac Rumors, citing sources. Sticking with the tech space, President Trump is going to unveil his own AI platform, Truth AI. What on earth could possibly go wrong with that? And last, but by no means least, brilliant news for Ryan if you ever pass your driving test. President Trump has approved tiny cars to be built in the United States of America, and I have had it confirmed that these will have an engine and they won't be pedal powered.
I would prefer to be driven myself, to be honest, but there you go.
That's if you haven't got a choice.
Well, quite. Thank you for that, Mr. Brown. So let's crack on with some choice headlines and choice stories from the Overnight News Roundup. As usual, do follow Zach Eisman on X. Do follow and subscribe to our Substack, the Overnight News Roundup, because it is the best way to get all the market moving news that you might miss during the night sent to your inbox. Pardon me. Trump administration, they're targeting beef prices again. Advisors want to tackle the rise in beef prices, which have reached record highs due to reduced cattle herds. The administration's officials have discussed reopening the U.S. southern border to Mexico cattle, increasing beef imports to boost supply. And again, this has been a story that's been dragging on for much of the year. Sticking with U.S. farmers, the U.S. is set to unveil a long-awaited farm aid package today, offering assistance of $12 billion to farmers hit by low crop prices and tariff policies. We did also hear that, what's his name, has sold his soybean farm.
Oh, Besson.
Besson has sold his soybean farm, which, apparently he's had at some point. I don't know. I think maybe too many people were sniffing around wondering if it was actually a legit thing. And then he's like, actually, by the way, I've just sold it. It all seemed a bit weird. So moving over to Japan, Japan's real wages, they shrink for the 10th consecutive month, with an uptick in nominal pay falling short of taming relentless consumer inflation. China's domestic stock markets that rallied following the weekend reports of Chinese authorities are working to increase leverage limited for brokers. Although this is along with other measures that may spur inflows into onshore equities. Note the Hang Seng saw notable divergence with broad weakness seen. On this, there was something that we actually posted over the weekend, which is a phenomenal number. Let me see if I can quickly find it. I think it's like $2.4 trillion of like CMA of cash on the sidelines being tied up in Chinese households. We're talking trillions of dollars, and obviously they're not putting it into property because of how the property market's been slammed, and obviously yields are pretty shitty. So you only need a little bit of that to start trickling through into equities, and we could see another ramp higher in Chinese stocks. Obviously, nothing here is an endorsement of Chinese stocks because, as Michael says, you don't really ever own the Chinese stocks. You're simply renting them off the government, and they might come back at any point. But still, I think the uninvestable, given that it's, I think, the main index in China is up 30% this year, so outperforming the S&P. So saying it's uninvestable, I think it's a bit of a stretch nowadays. Maybe we've got to start changing our tune, but we'll see. Sticking with China's exports beat expectations despite a US decline. China's exports rose more than expected last month, bouncing back as shipments to the US continued to fall, with analysts pointing to trade rerouting as a factor. Meanwhile, pace of imports in November stepped up from October, but less than forecast, leading to China's trade surplus coming in above estimates. Finally, with China's crude oil imports rose 4.88% in November from a year earlier, with daily import volumes reaching the highest level since August 2003. China's soybean imports reached their highest level since November 2021. No surprise there, with full-year arrivals set for a record amid strong purchases from South Africa and US trade truce. What else we got? Japanese investors snap up UK gilts. Japanese investors bought the largest amount of UK sovereign bonds in 4 years in October as they expect a potential Bank of England rate cut to boost the debt. Sticking to the UK salaries are picking up after months of near stagnation, according to an REC and KPMG survey that's closely watched by the Bank of England policymakers. Russian LNG reaches China despite sanctions. A Russian liquefied natural gas export facility delivered its first ship to China since being sanctioned by the US in January, latest sign of increased energy cooperation between Beijing and Moscow. Geopolitical news, I suppose we could call that geopolitical news. China launches intense air operations near Japan. The Chinese carrier strike group launched intense air operations near Japan over the weekend as East Asian neighbors traded diplomatic barbs in an escalating dispute, further straining ties. China and Russia, they have just held their third round of joint anti-missile drills on Russian territory in early December. That's according to Chinese Defense Ministry. French commercial banks hold their second largest amount of frozen Russian central bank assets in Europe, around 18 billion euros, but Paris has shielded its banks from plans to use the assets to fund a loan for Ukraine. So it seems like French government have one rule for one, another for our own banks there. Equity news before I hand back to the big man. IBM is in advanced talks to acquire data infrastructure company Confluent for around $11 billion. Meta has bought Limitless, a maker of artificial intelligence powered pendants, moving into the emerging but contentious markets for hearing devices, as chief executive Mark Zuckerberg doubles down on his bet on such wearables. Advertising spending will grow more than predicted in 2025 because the tariffs didn't take as big a bite out as expected, and the AI provided a boost. That's according to a new forecast from media investment group WPP.
Well, I know they're making forecasts for 2025 on the 8th of December.
Well, obviously looking back, I don't know. Looking back over my shoulder. Binance, they won 3 separate licenses from Abu Dhabi's financial regulator, giving the crypto exchange like one of the most comprehensive regulatory footholds yet. Finally, from me, before I hand back to you, some China bank investors. Remember Chinese Bank, the construction giant? They voiced concerns about its plans to delay bond payments at a meeting with local regulators on Sunday, adding pressure to the embattled developer just days ahead of the scheduled vote on the proposal. Yeah, so again, Chinese property sector, the woos and woes there. Yeah, it's never going away, basically.
No, it also is one of those where if I had £1 every time I'd heard about indebted Chinese property companies, then, I wouldn't be doing podcasts with you.
I'll tell you what. One thing I do want to mention before I hand back to you, and maybe get your opinion on this. So obviously, over the weekend, we had Macron speaking with President Xi in China, basically very hawkish, very hawkish on potential measures against China in terms of tariffs and anti-dumping laws and stuff like that. Very much following, echoing what Trump was saying not so long ago, when the EU was saying that that's the worst thing you can never do. So interesting to see how Europe are kind of turning face a little bit on that. And that's followed by today, when we've got Germany's MERS, which is over there, and apparently looking to follow up Macron and take a bit of a harsher stance. And let's not forget the MERS was meant to be over there a month or two ago, but had to cancel the trip because China only signed off on one of his scheduled meetings. So interesting to see what Europe's and the EU's play is here, because I wouldn't say poking the Chinese panda or the dragon, whatever we're calling it. I don't think that's the wisest move.
No, it's probably not. Certainly when Europe don't have anywhere near the leverage that the United States does. But there we go. When have they ever done anything that's wise?
Right.
Anyway, moving on to this week then, there's not really a lot going on today, to be completely honest with you, besides a 3-year Treasury auction at 6 o'clock this evening and a couple of BOE speakers. The docket is very, very light indeed. In terms of the remainder of the week, obviously, as we mentioned a moment ago, attention is going to focus heavily on the final FOMC decision of the year on Wednesday evening, expecting a 25 basis point cut, lowering the target range for the Fed funds rate to between 3.5% and 3.75%. Although, of course, as we discussed right at the top of the show, there is the potential for a huge amount of dissent at that meeting. Market participants will also pay very close attention to the FOMC's updated economic projections, and as well as that, the latest dot plot for a bit of guidance as to where the Fed funds rate may go next year. It's not just the Fed that we've got on the slate this week, though. We're also due to hear from the Reserve Bank of Australia tomorrow. They will hold rates steady at 3.6%. The Bank of Canada on Wednesday, they will hold rates steady at 2.25%. And then on Thursday, the Swiss National Bank, the SNB, they will hold rates steady 0%. Besides those policy decisions on the data front, we do get the latest US job openings data tomorrow, the October JOLTS report, and we will also get the September JOLTS report, which will accompany that data, very much being the last sort of piece of the jigsaw before that FOMC meeting. The only other notable data points that we have this week come from the UK, and that is on Friday when we get October's GDP data, expected to point to the economy having grown by a frankly paltry 0.1% on a month-on-month basis. Other than that, it is a fairly busy week of central bank speakers, just returning to that momentarily. We do have 4 BOE policymakers at the Treasury Select Committee tomorrow afternoon, and that will be followed by BOE Governor Bailey at a fireside chat on Wednesday. It's also quite a busy slate of Treasury issuance this week. Of course, a 3-year auction today. That will be followed by a 10-year sale on Tuesday and then a 30-year sale on Thursday. And also a handful of notable earnings to keep an eye on this week as well. We are, of course, through the vast majority of earnings season at this stage. But nevertheless, on Wednesday after the market close, we will hear from Oracle. And then after the market close on Thursday, we're due to hear from Broadcom. So a couple of AI-related stocks that traders may focus on there. But that is pretty much it for the penultimate trading week of 2025.
Wonderful. We still need to work out what our Christmas, holiday, New Year hours are, but I'm kind of leaning to
Zero.
We break
well, I can tell you what mine are. 0.
We break before Christmas. We come back after New Year, just like the good men we are. But Michael, thank you so much as always. It's a pleasure talking to you, my dear friend, especially on a Monday morning. The first person I've spoken to today. And what a way to start the week.
Can only get better.
Oh, God, your words, not mine. Listeners, I hope, as usual, we've added a bit of value to your day. Maybe put a smile on your face. Whatever you're doing today, keep it tight, stay safe. Don't do anything I wouldn't do.